Hey, what's going on YouTube? I'm going to start off with the dollar. Looks like we had a little crash. I thought it was going to bounce on our 34 on a 5-hour, but it certainly went through. So now we're below trend on a 5-hour. And watching the 8 and 13 cross. So we had a bounce, and it didn't make it on a 5-hour chart. Looks like we're breaking through on a daily. Previous low breaks. I thought it was going to break out. I thought it was a bullish move, but no. Thursday, when this extension bar took off, is when the gold and silver head fake was in place. And then as soon as dollar came back down, gold and silver recovered. Not fully, but they sure as hell knocked it down pretty good. We're looking for a break below our trend line here. Look for a bounce, as it doesn't look good for the dollar on the short-term daily chart. As far as the weekly goes, looks like it got knocked back pretty hard. We didn't reach the previous highs over here. It did tap it, but it has not been able to get above. We are still working with a higher low, so that's why it's important that we stay above that trend line. Anything could happen, but as far as it goes right now, we're bearish on the shorter term daily and the 5-hour, as it is broken down. Looked pretty good for a while, so keep an eye on that. Let's see, for a month. You can see the support at 90 got knocked back on our previous lows, our EMA 13 and 8. Watch the 8 on a monthly cross below the 13, as trend will slightly gain momentum on the downside. Let's look at the S&P. Looks like on a daily we had a bearish retracement. Came across, did its best to make new highs and stay. So we had an A-B bottom, came across, broke above 2100, broke previous high at 2109, went all the way up 2118, 2120, came back below our 34, made a low, and bearish retraced, and we ended up on our high, or came up right to the point and came back down to settle at 2060. So again, dollar bearish, S&P bearish on the shorter term. Let's see what happened here. Looks like we might be forming a reverse head and shoulders on a bottom. So watch necklines being broken down on the downside if that pattern breaks apart. We got previous low at 2055, which is a double bottom. Got another double bottom at 2051, and we got a huge extension bar at 2040. Longer term, still above our trend, but we are working with a extension bar, reversal bar, and a confirmed bearish pattern as it broke previous lows and went falling down. We did recover above our EMA 13, so we got support on the way down. We got support at 2040 and 2020. But the markets don't look good, so look for previous low breaks on the way down. But S&P's got support on the way down. You can see we've been talking about this for a while. Same old, same old. We got a lower highs. That's a huge top. If there's hyperinflation, it's not going to come down, but I think it'll be very healthy for the markets if this this thing has been going up for 8 years, pumping and dumping. I imagine that's the scheme. They pump it, and they're going to dump it. Looks like 1600 on the way down is the support. We came down to 1800 twice. That would be the final line of support for the S&P. But so far for the month, it's bearish. We are above support on a monthly chart, but we have we broke previous highs. We came all the way back in. Bounced off the EMA 8 on a monthly chart. So look for previous low breaks, as we got support on the way down. So far that doesn't look good. Could be a bullish retracement on a monthly chart, so we'll have to see and watch. Make sure that the month closes below the EMA 8. Then we can start looking on the downside. The Dow, same thing. We got a bearish retracement on a daily, shorter term 5-hour chart. Looks like we got that same left shoulder, and we need a right shoulder. We got the head. We need a right shoulder to come in. It looks bearish on the short term, as it went into resistance and got knocked back. Same with the weekly. You can see that nasty falling star and a confirmation on a breakdown. We did close above our 13 again, but look for previous low breaks, as that's a very nasty falling star, and it came right after a hammer, or excuse me, a hanging man. So look for previous low breaks, as we put in a lower high with a nasty falling star, and it confirmed that. But as you can see, we got the EMA 8, 13, and the 34 right there. So support on the way down. Let's look at this. We got a lot of talk about treasury notes around the world, and looks like the 10-year on a daily put in a extension bar reversal, confirmed on the way down. We got support on the 10-year at 131, 131.25, which is correlating with the previous highs, and then all the way down on daily chart to 130.50. Long term, you can see that extension bar. That's a nice consolidation though, so not sure if that's a top as of yet, because it just broke out. But you can see the extension bars has a exhaust and then come all the way back. So it looks like that. It looks similar to a falling star, but coming right after a breakout of a consolidation that very well could be an inverted hammer. So So it's looking good, but let's look in a longer term. It's been going up forever, so you never know what's going to happen. As the month looks bullish, and you can see the stair step on a monthly, step, 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 and that consolidation move on a weekly. We do have a W bottom. We got higher lows. Look for previous high breaks on the 10-year. But in all reality, it's only going up because others are going down. And let's keep going. Let's look at the NASDAQ. You can see the bearish retracement on the NASDAQ. That's nasty. So we had a nice bottom here, right? Higher low. Boom, came across. We got a falling star here. We got a hanging man here. Came across, broke down on the higher low trend line. Previous low break, take a ride. Came into support, broke down, came back into resistance, and then boom. Look for previous low breaks on the NASDAQ, as it looks very bearish, closing on its lows. Daily chart. And looks like a rolling over on the NASDAQ, which I thought it was gonna, remember over here, I thought it was gonna break down. So here we are once again, making a lower high, coming across again. Look for previous low breaks. Might get some bearish retracements first. Well, we'll see. On a monthly chart, NASDAQ, you can see that it hasn't rolled over yet, but we continue to run sideways, making lower highs for the past 4 months. Look for previous low breaks, but we got support coming down. Also look for previous high breaks if all else fails. We got previous highs not too high, not too far away. So see what happens for the rest of the month as it looks bearish from here. Moving on to crude. Looks like we got a nice bounce off of support on the EMA 8. You can see the reversal bar. So I don't know if we're going to see more downturn or if this is a bounce. That's a nasty reversal candle, and it is confirmed for the week. But if we open up, price can easily fill in that extension bar right away. That's a nice hammer right off of support. So momentum is up, but this candle is confirmed as looks like a gravestone doji almost, but certainly a falling star on a weekly. So we got a topsy-turvy deal going on as we have a reversal bar and then another reversal bar. Momentum is up. See if we can negate that falling star and keep moving up on this crude oil. It's a weekly chart. See what happens next week as we open up here pretty soon. For a month, crude is not out of the woods yet. We are working from a double bottom on a monthly chart. Coming across, we are above support, so it's likely on a weekly that was a run down to support, and it could move higher on a monthly chart, as it's well deserved. It got shot down pretty hard. Look for previous high breaks. I'm pretty sure it can run to 60, no problem. But it's got to get above previous highs first, as it's struggling right now. Previous low on a 60, which would be 50% of this candle. So see what happens. Betting that it's bullish. Let's look at this Deutsche Bank for a second here. We got a reversal bar on a weekly chart. Or it could have been a breakdown and a bearish retracement. So we'll see how we open on Deutsche Bank. But with the Brexit, and I wanted to show everybody this German 10-year bond. It's being pummeled. And look at the price. 16 cents. No, wait. It's almost negative. This thing is almost going negative. But you can see Deutsche Bank. Hold on. Let me get a daily chart on Deutsche. And then look at the daily chart on the 10-year bond. And tell me that these two are not closely related and correlated. They did both did the same kind of move. Can you see it? Both into resistance, both from a way huge bottom. It's well below previous lows on a daily chart. It does not look good. This thing looks it's oh, I didn't know it was. I thought it was like 16 cents, but I'm not looking at it right. That is 1 cent, 1.5 cents. That is horrible. This thing's going negative, and the Brexit is voting next week, so we'll see what happens. This thing is really bad. So you can see on the weekly, the same as Deutsche Bank on the Germany 10-year bond, sort of the same breakdown and recovery. Could you imagine buying a 10-year bond and at the end of 10 years getting 1.5 cents per year? Or I don't remember how they figured it out, but that's horrible. It's going to go negative interest rates, and I think Deutsche Bank is going to go down with it. I don't know if this is a hammer yet, but you can see why Britain wants to leave the Brexit. Everything's just gone to hell in a handbasket. And here's the thing: if Britain leaves, Germany's going to be the biggest economy in the EU. Do you think they're going to hold it together? Not with these. Not with this Deutsche Bank and the 10-year bond. There's no way it's going to hold up. So, we'll see what happens. Next week's going to be a big week for this all to come into fruition. Here's the Nikkei. The Nikkei weekly, you can see how it broke down pretty rapidly last week, as it looks bearish, and it continued to be bearish as it broke down that trend line. You can see how steep that trend line is. You can probably see it a mile away when it happens. So it doesn't look good. Previous low, it bounced. Last line of defense is at 15. It's right there. I've seen this thing move 1,000 in a day. So moving 600 in a week, no problem. As you can tell, the breakdown on that double top too, as it just crumbled. That's a bearish flag on a longer term. So it doesn't look good for the markets coming out of this week. You can see the bearish retracement on a monthly chart as it broke down across a 34, kind of back and forth on the 34, but you can see the breakdown and the last line of defense as it's going to crumble. Measured move would be on a monthly chart the top and the breaking point, which call it 16 and the top of 21. So you can take that measured move on the way down. It doesn't look good for the Nikkei, and some people are saying that Japan's going to be the first country to reach, first world country to reach hyperinflation. Really doesn't look good out there for the equity markets. Let's move to gold. Let's go narrow. We had a Thursday head fake that was pretty drastic. But you can see the recovery on a 5-hour, the bounce across the 34 over the 8 and the 13, and you can see the 8 and 13 bending up now as the price closed above 1300, which is awesome. Huge head fake though, so hopefully everyone held on to their positions, as this was just a huge head fake for everybody. And you can see on a daily the push forward. It's going to be breaking previous highs pretty nicely. Longer term, as we very well know, we want to break that previous double top and stay above and close above for a weekly chart. So about 1304, the double top. If we can close a weekly on that, we're golden. It'll keep moving. We're definitely above our 1280. If it happens to come back, use the 1280 as your support, as it already pushed through once and gave us a big head fake, and then off and running it's going to go. They always do the head fakes before the big moves, always. And of course, that bullish piercing pattern is continuing to perform very well, as it opened up on this last week down, piercing 50% of the previous candle, making this a 2-bar bullish piercing pattern, and off and running she goes. Silver, on the other hand, I think is lagging still, but you can see the stair step. You can see the stair step into support, the reversal bar, and the continuation on the way up. We sure need to get above 18 to show any improvement. Otherwise, it's going to stay on this pattern. Going on a shorter term, 5-hour chart, you can see the bounce and the continuation, closing above previous high. So that's nice. It's doing that same bending. Some would call that a bearish flag, but we're above support, so let's keep up there. And we closed on the highs. Let's go longer term. Monthly chart, you can see the 1-2 punch still. The 18 is the major break on silver. Just above 18, was it 1806? So look out for any more head fakes as it busts above and bullish retraces again. I'm sure they'll try anything possible to keep this thing from busting out. I mean, the measured move on this on a monthly chart is that, let's call it 14 to 18, so another $4. So we should get to 22, which would be previous highs and previous lows. Right now, above 1850, it's going to be tough to get through there too. So look for a breakout past 18 into 1850 and then a knockback, because that's when it starts to break into previous lows. We got a lot of resistance at 1850. That's why my target before was 1850, because that's where the resistance is. So otherwise it looks good. Just got a lot of work to do after the breakdown on Thursday, but nice recovery on Friday. It's still bullish on the long-term charts, so keep your head straight in the game, as you just got to hold on tight, because the big players are going to shake you out. That's what they like to do. Copper had a nice recovery, I think, if I remember correctly, but still on a fringe. It looks like the bearish retracement is in after it crossed on the weekly chart. You can see the bearish retracement and then the breakdown, and it came back up for most of the week but then slammed back down. So look for previous low breaks on copper. It's not in the clear yet. Use 2 as the major support, the big emotional spot on the chart. Let's move along. GDXJ, you can see on the daily charts, you can see the bust out and the head fake. Let's start with GDX. You can see the hammer closing on a 5-hour chart, or a daily chart. A nice hammer over support. Wish we could have got above 26 previous high. But look how we open on Monday morning. If it opens up, bust across the previous high, then what you're dealing with is just a very short trading range between the breakout and previous high. If it gets above the previous high, use that as your support, and then bust on through. It shouldn't have much of a problem as volume. I believe the head fake was on low volume, so you can see the investors, institutions on the bid, breaking it down into support, buy into support, and they even broke it down even further to make a point. So I'm sure that they got a lot of longs to shake their positions, the weak longs. But that's the game that we're all going to play here from now on. This is the most volatile market, speculative market out there, I believe. Once it starts going, it's going to be big moves both ways, big moves. So hang on tight. You can see on a daily chart, you can see the reverse head and shoulders. Here's the left shoulder, here's the head, here's the top. So break that neck, and we're off and running. Let's just jump to monthly, as the 1-2 punch is there. The breakout, the bullish retracement, and the punch. Let's see what happens. We got, I think we got a week and a half, I guess, before the end of the month. Going back to weekly, you can see the bounce off the support. Let's get above previous highs. We did, for the week, make a higher low and a higher high. So it's bullish. Can definitely break down, but we got support all the way down. So see what happens. First off, get above previous highs. Use that as your support. GDXJ, same thing, reverse head and shoulders. See the breakout, flat top break, and they head faked you. You can see the bounce right off of support. Use the weekly support as your friend. But the only thing is, the weekly support is way down. So it just wasn't ready. You can see the higher low, higher high, reverse head and shoulders. Should have a measured move on the breakout between the high and the double bottom. So you can take that, do a measured move as the pattern breaks out. Look on the shorter terms for any patterns and the twists and turns like a corkscrew. Looks like 41 and above would be a nice break. So it's right there. The head fake was strong, filled the gap, went further, made a double bottom off the 60-minute, and look for breaks above 40, 60, and 41 as we get above the gap. Use the gap as your support and resistance. Those are important. 41.22. Fill the gap on the way up. See what happens. Looks bullish on the, again, looks bullish on the monthly chart. The long-term chart is bullish. So, gotta keep your head in the game. Let's see, Nugget. It's a monster. Same patterns. Nice head fake. Reversal bar into support. Same. Can't get a read on the monthly chart, but it's a monster on the monthly chart. As it looks like this thing's going to double, no problem. Look for the flat top breaks, as this one hasn't broke out yet. So look for the head fakes. Make sure you're above on any certain amount of time on closes. If it looks like it's going to run, you might want to just be cautious as they take it down pretty fast. Nugget was a good mover last week. Up 15%, down 6, up 3, blah blah blah. It's very volatile, and the volatility is coming in. This thing's going to break out. It's crazy. JNUG, same thing. This is also another monster. As you can see on a weekly chart, that flat top break coming in. You can see the head fake on that one. But look for the flat top breaks on the long-term charts, as the monthly is a doozy. Look for that flat top break. Above 200 on JNUG. Take a ride. It's awesome. It's a badass chart on the bottom. Yamana. We got a close on the 5-hour chart, a inverted hammer. You can see the head fake as it gapped open on Thursday and just took it all the way in and continued. You can see the head and shoulders. Same pattern. It's above support. Trend is up, pointing up. We want to get above previous highs. Let's get above that gap. Stay above 5. Use 5 as your support. Let's go longer term. It's got that same look. It has higher lows and higher highs. On a monthly chart, still bullish. This one has not come across the 34 yet, but definitely bullish, as you got the 1-2 punch. We got a week and a half to get this thing above 5 and beyond. See what happens. CLF, kind of wondering where this thing's going to go, but from the bottom, see how they took this one down pretty hard all the way to the bottom, made an inverted hammer, 3-bar evening star pattern, took off. We got to break previous highs to get a flat top break, but it looks like it wants to come down again, because it didn't close above 5, and it made a lower high. One more. Let's just look at El Dorado for a weekly update. Daily, it's below. Did make a triple bottom and closed right at that point. But as you can tell on a daily, the 8 and the 13 have crossed below the 34. So it might be bearish for a little while on El Dorado. But you can see on a longer term, you can see the bounces off the 13. Did close above the 8, so that's not it's not good for a weekly chart. So it might come down, but see what happens. It needs to consolidate. Monthly could just do whatever it wants. Really, it's got that 1-2 punch still look, but right now it's struggling to get going on momentum. Anything could happen. So that's it, guys. Keep your heads on straight. Make sure you always look at the longer term charts to figure out the daily noise. Also pay attention to Brexit. I think the vote is next week. I doubt that the elites are going to let the Brits go because that would ruin the whole thing for them. So look for some voting fraud. It's bound to happen. But the Brits got to get out of there. If you watch Brexit on YouTube, the full movie, you'll understand what the hell is going on over there. But things to think about: if the euro crashes and the European banks go under, it'll probably take about 2 weeks for the American banks to catch up to them. So just if you see it happening, make sure you prepare. I'll see you guys.